What's going on, millennial money and investors? It's your boy Brady. I just got back from the desert. If you follow me on Instagram, I post a couple videos and some pictures up there. But today I want to talk about some stuff in the market. Just some stuff to kind of hopefully give you guys, especially if you're new investors, some risk aversion. So right now, the market is still pretty piping hot. S&P 500's up a lot. The Russell 2000's up a lot. NASDAQ, they're all very high. And here's something I want to give a warning. If you look at the technical analysis of these charts, we are setting new highs. The S&P 500, I think just yesterday broke a new all-time high, and it's been climbing on a really long bull run out of kind of the coronavirus pandemic. The issue, and one of the concerns I have is there's not nearly as much economic activity going on as there was before the coronavirus. There's still a lot of restrictions. Travel is restricted. There's a lot of people that are still without jobs that had jobs before. There's a whole lot of things. And I would also like to just mention, before the coronavirus really took its toll on the stock market, it was already at a pretty piping hot high point. And so I just want to throw this out there for you guys who are newer investors. Look at the technicals, look at the chart. Whenever you have a really extreme peak and a long run, generally there's always a correction following that. Now, how big the correction, it really depends on people's faith in the market still. Right now, there's a lot of bigger companies that I would say are maybe valued fairly, but there's a lot of companies in the market right now that I would say are overvalued, way overvalued. Now, a lot of people are explaining away why this is the case. Some economists are saying, it's because partial inflation is now baked into the numbers and this and that. I would be really, really careful. There's some other global events that are happening right now that a lot of people are not talking much about yet. I think this is just about to turn a corner, but the Russia-Ukraine events that have been happening, Russia sending a lot of troops to the border, also aiding the resistance there, and the escalation is just increasing day by day. Russia doesn't seem to want to back down. Ukraine thinks they're going to war. This is going to pull a whole lot of people into war, including the US, if this escalates, which it doesn't seem like it's getting better. Russia keeps sending more troops and more equipment and more tanks. So that's one piece of this that also could really upset the economy and just pop it. Here's another one that just happened over the weekend. Israel hacked an Iranian nuclear base that just went online and shut down their power and broke a bunch of equipment with how they hacked it. I didn't really look into the details. I'm not a hacker, but Iran called this a nuclear act of terrorism. They're mad, and they already don't like Israel. Tensions there have been rising like crazy. Russia and China have also just kind of partnered and said, yeah, we're not gonna let America manipulate us and manipulate economies, the global economy. That's not good. They both are not really excited or happy with America right now, and that's been escalating for a long time. And then another big one is America's relationship with Taiwan versus China. This is another one that, it might seem like small potatoes right now, but with the economy where it's at and with just the global sentiment of fear, and we have not really recovered, and our viruses, or is the new Bridges virus, immune to the vaccinations. Some of the vaccinations have a lot of negative side effects. Some vaccinations people don't want at all. There's all kinds of stuff that is happening that makes me think, the market is way too safe, too stable right now. I looked at the VIX, going through from Friday into today, it's very low. Why is the VIX, the fear index, so low right now? There are so many different things that could pop this market very easily. Now, I get, maybe people are thinking, oh, it's because of inflation. people are baking those numbers into the prices now because we printed a lot of money. That's true, but there's a whole lot more at play here than just those things. And I would say the weakness of the economy compared to where we were about a year ago does not, in my opinion, does not give credence to the prices that we're seeing right now and the bull run that we're seeing right now. So my advice to you, beginner investors and people who are just kind of getting into stock trading, getting into investing, and you're managing your own portfolios, I would be really careful. If you have some stocks, especially large caps that are up quite a bit, or small caps especially that are up quite a bit, I would take some profits right now. This would be a really good time to do that, because I think there's probably going to be a correction here, probably this week, maybe next week, where we'll see probably like a 4 to 5% pullback at least, in my opinion. And that is aside from all of the other big risks. You know, historically, Democrats go to war, Democratic presidents. That's, you know, no knock on presidents in general. I think sometimes that's what the circumstances call for, but there's just a whole lot at play right now that could lead to war. And so it would not surprise me if that is also another event that takes place here soon that could really shake up the economy. So my advice to you guys, take some profits, be a little careful out there. If you're thinking about investing into something, really look at the fundamentals before you get into it right now, or wait for a pullback. Right now, the market has been on a long uptrend, a long bull run, and I really don't think it's at a good buy point. There are a few select stocks that might be at good buy points, but in general, the market as a whole, I think, is overvalued and is going to pull back. So that's my advice for you guys today. Just wanted to throw something out there a little different, a little more practical advice, because as I'm investing, I'm actually buying some SPXS, which, if you don't know, is it's a double leveraged bear of the S&P 500 index. And so there's SPXL, which is the bull. So if you think the market's going to go up, it's 2 times basically the S&P 500, and it's an index ETF. The SPX is the inverse. So I see it at not all-time lows, but it's very, very low given where I think it should be. And I think there's a good chance that the market will pull back, which would mean SPXS goes up. So I hope that helps you guys. If you found value in this, subscribe, like if you haven't already. I want to keep giving you guys really solid content to help you guys in your investing journey so that you guys can have financial freedom, build wealth, and retire early. This is Brady for Millennial Money and Investing. I'll catch you guys next time.